Good morning, everyone. Don Hicks here from Sheakley and my co-host, Rob. Rob, can you hear me?
Yes, sir. Rob
All
Simon.
righty. Good morning, everyone. So we are so excited to be doing this type of presentation. And this presentation will be a little bit different than you're used to. So the purpose of this webinar is just to give you some education with regards to some of the biggest business challenges that we are dealing with today. So Rob and I, we're going to introduce ourselves, and if you can go to the next slide, we can talk about the agenda. We're going to give you a little bit of a background in regards to who we are and the experience we bring to the table in working with businesses. The topics we are going to talk about are cash flow principles. Rob and I really spent some time in coming up with topics that is so important to the business landscape today. So we spent some time planning this and talking about it. Now, this presentation it will be a little bit more unique than what you may be used to. So I think people are getting a little tired from PowerPoint slides and all of that. So we're not going to do that. We're going to have a conversation with you. So we welcome your questions as we go through the presentation. So feel free to put any questions or feedback or comments into the chat, and we will get to those as we go through the presentation. But we're going to talk about cash flow principles. Rob brings a ton of experience in regards to helping businesses with cash flow and access to capital. That is a big topic in the marketplace today. We're going to define and talk about risk management strategies. Risk management is a term, I think, that is thrown out there in the market, but I think a lot of people have a hard time defining and understanding exactly what risk management is and some strategies around that for your organization. We're going to talk about operating expenses, so how to deal with some of those costs, the variable costs and the fixed costs in running your operations and running your business. And then access to business capital. Rob is going to spend some time on that. This will be a question and answer format. So Rob and I are going to have a conversation with you, and we invite you to be part of that conversation. So again, any questions, any feedback, please feel free to put them in the chat. We're going to go for about 50 minutes. We have an hour dedicated to this, so we want this to be of value to you. So please be interactive, and we welcome your feedback and suggestions and questions. And then we're going to end with next steps. What do next steps look like for you? If you are interested in what we have to share and our experience, and then we'll close it up. So Rob, you ready to go, bud?
Absolutely.
All righty, let's do this. So next slide, please, Ryan. Rob, you want to give a few minutes about your background?
Oh, I get to go first. Wow.
Yes.
I was going to let you, thought you were going to be leading off.
Yeah.
Here we go. Yeah, I'm obviously Rob Simon, company current with SharpCFO. We are a financial leadership management company. We provide provide CFOs or our CFOs for businesses as well as nonprofit organizations. Obviously, the point being to give the benefit and the talent of that on an outsourced consultative type basis, particularly for firms that don't have a CFO internally on a full-time employee basis, but yet obviously said would absolutely benefit from the talent and experience. We have bench strength with CFOs in our organization as employees who have 20 years of experience in managing financially businesses from a wide range of industries and spectrums. I myself spent over 30 years in the moving and storage industry in transportation. 21 of those years I was the chief financial officer of the company. I handled all aspects of financial management, cash management, payroll management, as well as a profit share, as well as administering a profit sharing plan as well within the company, and also within Sharp. I do some work. I'm also involved with exit strategies for businesses that also are interested in obviously selling the business. And I think you're up, Don.
Okay, very good. So next slide. Thank you. So when Rob and I met and we talked about this, we became very passionate in trying to find ways for businesses to deal with the landscape they are dealing with. I'm not a big fan of the term new normal. I think it's a contradiction in terms. You know, if something is new, by definition, is not normal, right? But I think businesses are being challenged. So as Rob and I got together, his experience as being a chief financial officer and the consultation he does for his clients, along with what I do on my end with managing risk, we wanted to bring that experience to you. So I could not be happier to be working with Sharp CFO to bring that experience to you. A little bit about my background, not as fancy as Rob's, but I've been doing this since 1997. So I do have a master's degree from Villanova, former military, United States Marine Corps, something I'm very proud of. But one of the things, as far as my background in working with businesses, I've worked with businesses in different areas, whether it's helping them with some of their legal work. I am not an attorney, but I do have a legal background. I have a background in corporate technology, in corporate enterprise. I used to be a broker for a number of years, helping companies with their healthcare and their benefits. I've worked with both the private and the nonprofit and public sector relative to public administration. So my background brings just a lot of different experiences and disciplines that businesses typically have a need for and struggle with. So that's a little bit about my background. Now, this conversation, which we're going to get to here next, is I think we have all heard in the news about the K-shape, right? The K. And what I mean by that is what I have seen in the marketplace and talking to businesses, and I talk to 5-6 businesses per week, and I see a trend. I see a trend. The trend that I see is the K-shape, meaning I see operating expenses increasing and revenue decreasing. Operating cost increasing and revenue decreasing. So that is the challenge, not for every business, but for a majority of the businesses that I talk to. That is the challenge that I see. And hopefully, Rob and I will hit on some of those challenges and helping you deal with that if it's applicable to your organization. So with that, Rob, let's get started. I'm going to throw, if it's okay with you, I am going to throw the first question to you for the audience. Okay, you ready?
All right.
All righty. So you talked about cash flow. What do you see is the biggest challenge in cash flow for businesses and organizations?
I think obviously what's really cash flow has obviously really come to light, but it's really something a business should always be focusing on, whether we're in a K shape, a V shape, or a straight up shape, straight up line from the standpoint of how things look and where things are. And I think it still focuses no matter what the time period of what's going on is in terms of allocation. How are you going to allocate your cash? Cash is finite. We can't just print it and produce it. Where are you going to use it? You need to be monitoring it. You need to have very good strength in terms of what's coming in, when it has to go out, and for where, and to also kind of really be as self-reliant and with it from the standpoint of being able to generate internally the cash you need from the standpoint of sustaining. What's going to happen, obviously, what's already starting to happen, obviously, is having to start to live. You know, there's been a big buffer in terms of government loans and the government assistance activity that was done throughout with the CARES Act or other stimulus aspects, which is now starting to expire and to go away. And a lot of businesses have worked their way through that. We all know there's plenty of talk about a second round, but right now there isn't a second round, and we need to go off the assumption that there's not going to be a second round. So it's imperative to know, where your cash goes, where is it spent, and also and when does it need to go, and having in essence a 13-week, 90-day rolling cash forecast is a tool to implement, is a tool to have. And by simply it'll help you track from the standpoint of knowing what you have coming in, what you have going out, and you need to constantly, update that. But even the simple things, pay close attention to receivables, not only the age, but also get standard down when you know a particular customer particularly pays you, when you particularly receive that. So you can always have that in mind, be able to see from the standpoint when you invoice that particular client, you can have a pretty good idea of when you're going to be receiving that. Come into play too is obviously is payables. I mean, you again watch the age, but also the disbursement timing of those of when you need to go, and can you extend certain things out or alternate alternate certain ones from that standpoint to give yourself a little bit of a buffer.
Okay.
And another thing really to consider too, I think something might be overlooked is your invoicing efficiency. I mean, how quickly from when a service or product is delivered to a customer, how quickly is the invoicing done? In many cases, if there's a week's lag or a long lag there, or you're internally dragging out your cash receipt time, because obviously most people aren't going to pay you without having an invoice in there first. So I think, I mean, a lot of these they require attention, they require some work, they require some focus, but they are, I mean, they're pretty tried and true.
Yeah, got it. So a couple of things, if I can expand on that, that's really good stuff. A couple of things that you mentioned stuck out to me is when you said cash is not infinite, it's finite, right?
Finite. Mm-hmm.
And finite is not infinite, it's finite. You mentioned self-reliant. So if government loans or access through government programs is now available, and if cash is not infinite, can you give some examples of being self-reliant in regards to cash, access to cash and cash flow?
Obviously, it comes down to, maybe if they're separate, it comes down to the standpoint of being of collecting. I mean, your collections versus your disbursements. And obviously, you want your collections to be ahead of your disbursements. You want to be, selling enough product, enough service from that standpoint, and obviously at a proper, enough markup profit increase as well, so that what's coming in is going to cover what your costs are. Yeah. Obviously, on the flip side of that, sometimes I think gets overlooked are the cost aspects, and are watching, in many cases, having to watch and hawk your costs better. So I think from that standpoint with cash flow, to back with you, Don, from that standpoint is, I know there are things that you can do and look at from the standpoint of an assessment with a company with their functions and things from the standpoint of the cost. So maybe throw a little bit off of this, how it is now going to tie in with the cash flow aspect, a little bit of how maybe some best practices, some of the reviews you do, and maybe what you see when you do those type of assessments from a cost standpoint, what you can offer.
Yeah, so that's a good segue. So from an operating expense standpoint, a lot of people on the webinar may be familiar with this, but I first wanted to talk about how you define operating expenses, and then how do you quantify it. So, when I look at operating expenses is, rent that you pay, equipment that you must buy for your organization, your inventory, your marketing, your payroll, and your operating costs relative to insurance. Now, there are probably 30 other things that we can talk about when it comes to operational expenses, what's required to operate your facility or your organization. So that is sort of my definition of operating expenses. So again, my hypothesis is operating expenses going up, revenue staying stagnant or going down. And that to me is a formula for some real heartache. So that's the definition. Now, how do you assess that? How do you quantify that? I think that organizations, some do better job at this than others. But to identify your operating expenses and the vendors that you are using for those expenses. Healthcare costs, as an example, they continue to rise. So the question becomes, how do you deal with that? How do you engage with the market and the industry to control your healthcare costs year over year? Instead of every year, your broker or the carrier is beating you over the head with a 6, 8, 10, 12% increase. So the question becomes, are there other options in the marketplace to you that you may not be aware of? So as an example, Sheakley, some that I do and my team does, is can come into an organization and capture those operating costs. Now, some operating costs in my world are direct. It's a direct cost, meaning my workers' comp premium every year is X. My healthcare cost is X, and it typically goes up year over year. My payroll cost is X, whatever those direct costs are. You can easily quantify those, in my view. You know the vendors, you get an invoice, it's a direct cost. You know those costs, and they typically go up every year. The challenge I see for businesses, because they typically don't have the time, they're running their business, are the soft costs, are those hidden costs that you may not be aware of. And let me give you an example of some soft cost or some hidden costs that are deadly. Is things like your turnover rate. How often are you bringing in someone into the organization, a new hire, and they don't stay with your organization? Are you losing that talent? Are you losing that experience pool, those demographics for your organization? So turnover rate is very, very important, and to know that. Not only to know what that turnover rate is, but if it's unacceptable to what you're trying to accomplish, what's causing it? And I do think is deeper than an exit interview. I really do. So determine what those rates are and what's causing it. Another thing that from a soft cost standpoint, that some organizations may not be aware of is safety within the organization and return to work. I see it every day. So you have an injured employee, and that employee can no longer be productive. That is revenue for the company. So either that job does not get done, or another employee or employees have to fill that spot. And all of that lost revenue, lost productivity costs money. It's not something you get an invoice for, but it costs money. One of the things that companies have been really challenged with is recruiting and hiring. So I did a survey about a month ago, and finding quality candidates is a tough thing. And we can talk about that later, but there are some ideas that I find in the marketplace to make sure that you stand out when you're looking to recruit and hire quality candidates. So if you have a situation where you have unacceptable turnover rates and you're having trouble filling that candidate pool with quality candidates, that is a problem, and that is a soft cost that can over time have a catastrophic event or an outcome for an organization over time. It's not something you see right away, but is what I see as sort of the silent deadly killer. So how do you deal with that? So we defined operating expenses, direct cost. We defined some examples of soft cost. Now, how do you deal with that? And to your point, Rob, I think is an assessment, is bringing in some type of professional, whether it's Rob, whether it's me, whether it's someone else, bringing in a professional firm. And you may be surprised, it's not as costly as you may think it will be. Bring in a professional expert to do an analysis. For example, Sheakley, we do an analysis like that for no cost. But bringing them in and have them touch these different areas within the organization and quantify some things, help you identify your turnover rate, help them identify what's causing it, help them identify some of the safety risks that you may have. What is your return policy? Are there alternatives from a medical healthcare standpoint? And do a top to bottom review on all of those key areas. Is your organization as efficient as it can be when onboarding your employees, for example, when offboarding your employees, is it as efficient as it needs to be or could be? So once you have defined it, it is aligned with your organizational goals. You have an assessment done that identify areas that are working well and areas that may not be working well. And more importantly, where does your risk lie year over year? What does that risk lie? And identifying that and put it on paper, now you can execute a plan around that. I just don't see enough of that in the marketplace today. So that's a long answer to your question, Rob, but does that help a little bit to capture at least my definition of operating expenses?
Yeah, I'm going to hit. I think there's a major point that you hit on that needs to be really aware of, and I think that you touched with it relative to health and healthcare, medical benefits from that standpoint, because it is also within the business insurance, property and casualty insurance markets, as well as in the health care markets as well. I mean, there is a hardening in the insurance market, which means premiums are going to increase. They are increasing. And it's something from that standpoint now, if a business really should be beginning maybe a little bit earlier than usual. But if your renewals are January 1st, and this is October 1st, now is the time to absolutely begin speaking with your insurance brokers, your insurance advisors, or if not, reaching out, for example, to Don from the standpoint of that type of review to go through, because you're coming back relative to cash flow and looking at 2021. And if we look out 13 weeks, say from October 1st, we're basically in January to know what it is you have upcoming. The chances are very strong and very good that insurance is going to be an area across the board that is going to increase. That there is no question that market is hardening from the standpoint of coverages and in terms of premiums as well. And that we, like you from the standpoint, as you said, would come in and do the assessment over various functions and various pieces and the direct costs, making them quantifiable as the things that you can offer and do. We SharpCFO, we do the same thing. We in essence call it discovery, but there's a lot we can do from the standpoint of going through various processes and what's happening from a financial aspect, and be able to do the same type of discovery, same type of report back as to what may be helpful, what can be refined,
Yeah.
within those processes. I found it interesting. We can pick it up later too. As you kind of hit that there are a lot of questions and issues relative to recruiting and hiring and still finding quality people. And you would think from the standpoint of where the employment rate went and everything, a lot of that was out, a lot of companies that got back, and a lot of people that got, unfortunately, became unemployed, that wouldn't be the case. But I think what you see in many cases, I think a lot of people are getting very highly, some of these positions get so highly specialized and skilled as to what's needed. It is almost always hard to fill and find those positions and find those proper talent.
That's exactly right. And I'm going to throw a question to you, Rob, that talks about cash flow and capital, but you touched on the medical piece. One of the things, the industry, the healthcare industry, brokers included, because I used to be one, this is my opinion and my hypothesis, we have gotten too used to, at renewal time on your healthcare, someone coming to you as an organization and says, your healthcare, congratulations, your healthcare renewal is only 9%. And as long as I see too many organizations that say single digits, I'm good. Over time, that's 9% increase over a bigger number. Let's just say the year after that is only 4%. Well, that's 4% of another bigger number. And over time, it is cumulative. I think we really need to work with our brokers to define, if I'm getting a 9% increase, really understanding what's driving that. I see too many organizations say single digits, I'm good, let's renew, but not really understanding what's driving that 9%. We've gotten too used to the market saying trend. And that's what the market will say. You're renewing because of trend. And there are some increases that are legitimate. I'm not saying that. There are sickness within organizations. There are medical conditions within organizations. And some increases are rightly justified. That is normal. That is a cost. But sometimes I have seen organizations, they get their renewal single digits, but you don't know what's driving that. And you ask that question. Is it claims? Is it health conditions? Is it demographics? You know, go to your broker after this call or when you get your renewal in January, and let's just say you got a 2% increase. Ask your broker, well, if I got a 2% increase, are there options that give me a savings? Right? I just don't see those conversations being had, that even when you in your mind, because you're used to single digit renewals as being the norm, of really diving into, is that really justified? Is it normal? And are there other alternatives? I can get access to something even better? So please have those conversations with your broker to see if it's justified or not. And if it's not justified, look at some alternatives. So with that, Rob, what do you see as being the biggest challenge to businesses having access to capital?
Obviously, a lot of it goes back a little bit to the, again, we have to take in the fact the stimulus programs. And the stimulus programs,
Yeah.
I think, were a big benefit across the board to what they did. They definitely opened up money from that standpoint and availability and how it was back. So in terms of banks doing it. Now, there's still a lot of activity and loans and things that SBA itself is doing. And a lot of the SBA programs, I think they for a long time kind of have this weird connotation to them, or people are just leery of getting involved in them because it meant, it was the government, or there were additional requirements, or there were just things that you felt like you were shackled to or about it. But yet they're really driven and for a lot of small businesses from that standpoint, and a great benefit. And most banks, especially most banks here, do have SBA specialists within the bank that can help from that standpoint with capital, with that access. The other point that the SBA is definitely involved and is definitely doing as well are acquisitions. So from a standpoint of a business, if you're looking at acquiring another business or expanding in that way, there are SBA loan programs that are available for those purchases. So I think the main thing with the access to capital and doing that is talk to your relationship banker. If you don't have one at your bank, you should get one. Or if it means maybe having to change your banking relationship to a different bank to have one, then so be it. But you should, your banker, relationship banker at your bank should be a person you confide and advise with and talk to pretty frequently about what's going on and about your needs and what's there. Now, I know in many cases, yes, banks probably are doing a bit more additional maybe scrutiny and review based on obviously the economic environment, based upon the shutdowns, based on what happened, based upon how quickly a company's coming back and where they are. So it is important, I think, especially now, to have your financial records and reporting in good order and in presentable order to be given. And if business doesn't and needs help, then there's help that can be help. There's help out there from the standpoint of being able to do that and accomplishing that. I think there are still even within that, I think there what's been reported in case of there are cash issues for small businesses still, but there are also debt issues for big businesses. So it is a mix. But I think funding is there. You're just gonna have to go through the proper channels and have everything ready from the standpoint for working capital, for equipment. And on top of that, there are alternative methods. There are firms, companies that practice a lot of asset-based loans. In many cases, the asset-based is accounts receivable from the standpoint of being able to provide funding and providing working capital as well as it's needed.
Got it. So do you see a lot of acquisitions in the marketplace right now? Number one, if I can expand on that, do you see a lot of acquisitions in the making over the next, well, in the last 6 months, and then if you look forward to the next 6 months, do you see a lot of acquisition activity in the marketplace, number one? And number two, is this a new phenomenon where the relationship with business bankers is becoming so crucial, or is that a result of the PPP loan process, 4 or 5 months ago?
I think we're make it, quite frankly, to me, it should have something should have always been there. You
Yeah.
really should have you should always really have had a very strong relationship with the banker at the bank you're at for various things to be able to talk to run through, from the standpoint of the working capital, from the standpoint of the business and the reporting aspects as to what you need. Yeah, I would say yes, it definitely came more to light and became much more stronger need, primarily with the PPP loans. And in many cases, because most banks, because of the volume, and especially because of that first batch, quite frankly, it was somewhat, quote unquote, limited based upon all of a sudden what the demand was for it. We're dealing first and foremost with their customers, not with those that weren't their customers. And I think the more, like I said, the more direct you could be and had that relationship with your banker, probably the better you had in terms of getting through, obviously, within that program. And I think that the second part too, yes, is the CPA and your CPA relationship, because in terms of the rules of those PPP loans and what has to be filed and what you have to do and how they have to be recorded, it really became as much anything a CPA issue and a necessity from the standpoint of confirming their CPA and having so that that's properly in order, and that you're following how it needs to be followed, and that in essence that can then become a forgivable funding that was giving and not a loan, with from within that. So I would say on those 2 points with that, yes, there is the point and prospect belief that there are a lot of baby boomers are kind of getting, in many cases, that age that businesses are going to be the standpoint of needing to exit out or being ready from the standpoint of having to sell their business.
Yeah.
So there is kind of a drive there and kind of a factor within the market that probably going to drive some things and have some businesses that are going to be available for sale. And then I think there are always businesses and avenues that are looking for that are looking to add, that are looking to acquire. Be they straight businesses looking to expand from that standpoint, be it private equity type firms, be it other type of investors or investor group and capital fund groups that are interested in it as well. So I think there's some things that kind of been a little bit sidelined a little bit through some of the major portions of COVID. There might be some things kind of wading through and letting some things kind of get back and companies kind of get back to operating and getting there. But I think there'll always, especially, like I said, I think especially from the standpoint, in many cases, just the generational aspect of owners currently, that there's projections are there will be some movement.
Okay, very good, very good. So you got a question for me on the operational expense side? Really good stuff.
I probably would let's kind of pick back up more on let's go back, kind of pick up a little more on the insurance aspect and that hardening aspect, but from a standpoint of risk assessment, I think that risk assessment can be separate. Obviously, it's just not only business insurance, but what type of risk management aspects do you kind of see, and are you kind of encountering with prospects and with clients?
Yeah, so I spoke a little bit about the insurance aspects. So the healthcare insurance side of things is by far the number one thing that I see, as far as just an explosion of increased cost year over year as it relates to healthcare, particularly in the smaller to mid-sized market. And I define smaller to mid-sized market as, an employee size of, the small market to me is 1 to, 49 employees. Mid-market is 50 plus. They are, seeing some real pressures from from a healthcare cost standpoint. Now, it's counterintuitive to me that because of COVID, we are seeing carriers be sitting on a lot of cash right now because people aren't going to the doctors for normal procedures or typical procedures or procedures that they normally would go for because of COVID. So carriers don't have to spend that cash. So the carriers right now are sitting on some cash. So I'm waiting to see in the next 2-3 weeks for the January renewals, what impact that's going to have in the marketplace. I'm interested to see what those renewals are going to be. If it's in fact true, and I don't know, I don't have access to their books, the carriers, but are they going to sit on that cash, or are they going to pass off some of that to their customers by way of managing their renewals? So healthcare costs is by far the biggest risk from a financial standpoint that I see is the healthcare side. The second risk area that I see, and risk management is just helping an organization prepare for an unintended occurrence. Something that you did not expect to happen is my personal definition of risk management. And that can be on the operational side. It can be on the financial side. We talked about direct cost. It can be on the reputation side. And reputation is, what kind of business reputation do you have in the community? You know, former employees, what are they saying about your company? Social media, what are they saying about your company? Competitors, what are they saying about your company? If you have an injury at work, what does that say about your company? And all of that reputation has an impact of how attractive customers are in working with your organization. All of that is risk. And again, I'm not quite sure people think of it. A lot of companies think about it in those terms, particularly companies that are legacy and just used to doing business a certain way. But operational, financial, on the insurance side, on the business reputation side, on the safety, health, and welfare of the organization. And with COVID, the health and welfare spans all industries. Now, you can be an office technology company and now have to deal with safety health issues just the same as a manufacturing company with machines. It's impacting everyone because of COVID. It used to be safety in our world 6 months ago was some of the riskier industries as far as job responsibilities, the manufacturing, the transportation, the logistics, you know, companies that inherently have risk associated with their job duties. Now with COVID, it's everyone. And that is a significant area of risk. Your employees getting sick, your employees returning back to work, and those unintended consequences. So I see a danger with recruiting talent for the organization was a challenge a year ago. It was already a challenge for businesses, finding quality candidates. So if it was an issue before COVID, it's more of an issue now. And before we wrap up, I do want to talk about some ideas to help organizations with their recruiting and attracting good candidates. So I hope that answers your question a little bit, but risk management touches the obvious and the not so obvious when it comes to driving revenue and controlling operating expenses. So
I want to throw just from listening to what you said there, I want to throw just an idea and a risk concept I portion back to you a little bit in thinking about this, because I think the other thing from the standpoint, we focus on, when we talk about with cash flow in a business and growth and things they want to do, is that I think it's a point now, the business needs to focus on what they do and what they do best, and what their people are best in for from a talent standpoint, be it their product or their service. And I do think really a bit of a risk within there are going to be the type of things, and I want you to pick up on these as well from the standpoint of keeping. I think there's a risk of keeping certain functions inside a business and trying to do it yourselves.
Yeah.
HR and payroll.
Yeah.
Workers' compensation.
Yeah.
Obviously, the health, medical, and benefits that we touched on.
Yes.
Obviously, retirement plans.
Yeah.
And I know these are all, one's kind of within the wheelhouse, and we've talked about the standpoint in many cases. Maybe what you need to do is certain function things you need to do is to realize from an internal standpoint, you can't do those as well and shouldn't. So now let's look outside and bring somebody who can. I'm just curious on your perspective, particularly on those four and that idea of kind of being risky, keeping them internal.
Yeah, thank you, Rob, for that, because that's an area that doesn't get enough attention. And here's what I mean by that. I see, and particularly is in the small to medium-sized market, and I get why this is structured this way, because your cost, you only have limited resources. I get it. But I do see too many organizations that are structured where employees are wearing multiple hats. They're wearing too many hats. Some persons are doing HR, they're doing accounting, they may do a little bit of sales, they're doing the receivables, they're collecting on payments, they're doing paperwork, they're doing employee handbooks, they're managing work. It's too much. So, and I get it. I'm not saying that that's bad, that you have limited resources in a business. I get it. The question becomes, is there a better way? Can you repurpose someone's job to where they can focus on their core competency, what their strengths are, versus and be focused on revenue generating activity versus focus on 7 different things where they do a little bit of this, a little bit of that, a little bit of this, and some of those things do not generate any revenue for the organization. It's transactional. So the question is, do I take a look at my organization and how it's structured? What are the demands of my employees? And is there a better way? Can I outsource some of these non-producing activities that are required so I can repurpose my employees that drives revenue for the organization? And by the way, it drives them to their strengths, so they tend to stay with my organization. We talked about the turnover rate. So, outsourcing things such as human resources, outsourcing things such as safety, such as payroll, those type of transactional operational things are things that let someone else do that stuff and repurpose and think about repurposing your organization to where your key employees and your employees can focus on what they were hired to do versus spreading them out so thin. I see organizations when it comes to human resources that don't think human resources is strategic. Human resources is defined too often incorrectly, in my view. It's defined as where problems go. It's defined as paperwork. It's defined as just employees, and is not. I hear companies say, my employees are my biggest asset, but they don't really have any structure when it comes to engaging with and managing those employees. And with that comes managing the insurance, managing the workers' comp, managing the safety, all of that. So if you don't have expertise, consider maybe looking at alternatives to that. Have someone else do those functions for you and be the back-end support while you repurpose your organization that really focuses on driving revenue. So just think about that. Have some conversations and look at alternatives. I'm not saying that model works for every organization, because it doesn't. But it's something to consider, it's something to think about. And for organizations that do that, I can tell you that the data suggests there is a significant return on investment by them restructuring their core competency and having experts do expert stuff, and they do what they're good at. So hopefully that answered your question a little bit. We're getting to I'm sorry,
Absolutely
Rob.
did. Yeah, absolutely did, because you're factoring, I mean, within, as you just stated it, you have direct and indirect cost benefit within there. And obviously you have hard and soft benefit within there as well.
Yep. So very good. As we sort of get to the last 10, 15 minutes, I wanted to ask you, Rob, as I mentioned, I did a survey, and one of the things that came out of that business survey are a trend in delayed payments by customers for businesses. So they're invoicing. You talked a little bit about that. We talked about finite cash and access to capital. But man, I see a real problem with invoicing, but more importantly, businesses getting delayed payments from an accounts receivable standpoint. Can you talk about that a little bit more and what you are seeing in the marketplace?
Yeah, I think one of the other things that's happening too that I've actually heard from a couple of businesses that I've spoken with and dealt with is also from the standpoint, from a revenue standpoint, is that customers are now also buying less quantity than what their usual was. So it's fine that you're still selling the product, but you're not selling as much as you were. So you kind of having a decrease of revenue, and which may very well mean that you're sitting with more in inventory and cash locked up in inventory now as well. So I think there are a couple of different trends within there. But yeah, I think it is a matter of I think that definitely happens from the standpoint with the payment, a bit of a payment slowdown and people being a little bit slower. Because again, I think it comes down obviously to some element of cash conservation and trying to match. What they have incoming versus what's outgoing, which again really kind of flips back more a little bit again to the previous discussion on and having a 13-week cash flow forecast to know what you yourself are paying out and what you yourself have coming in as well. It's against anything else. You need to be open. You need to monitor your receivables, obviously, and be talking to customers and know what their issues are or what it is. Maybe you also need to get into a standpoint of if they can't pay an entire invoice this month, is it better from the standpoint of offering to have them pay half of it for this month, the other half the next month, so at least you have a half within the time period that you want, because obviously you need that in. There's already, we talked about direct costs and other things that have already been incurred and probably paid that you need that revenue back for, that cash back for, from the standpoint of covering. There are a couple other alternatives, for example, with receivables, a little bit like that too. There are additional products from a standpoint with credit insurance. There are companies that in essence will insure your AR. Now, just like banks and standpoint with certain elements of working capital and equipment loans, they've gotten a bit more, something might be a bit more restrictive with them as what they'll offer, how much they'll cover, but basically, in essence, they cover that, they cover that receivable that isn't paid at X day or X period. The credit insurance then will pay you in full. Now it's the credit insurers to go to collect and pick up. There are other available options, I think, with that standpoint, in terms of, for example, with factoring. There are fees and some other things involved in that, but basically, once you invoice a client and you have that approved by that factoring company, what they're doing, they're going to pay you a certain percentage, not 100, but maybe say 80% off the bat on what you just invoiced.
Yeah.
You have it, and then eventually, when that customer of yours then pays the remaining 20%, then you'll get the rest of your 20% back. And as I said, there are fees and other things that are involved within there. And then there are ways by which to kind of fund yourself too, as I alluded to before, with what's called the asset-based lending. And there are alternative companies that offer those type of funding outside of banks that in essence will in essence fund money to a business based on what their receivables are and where they stand and how they've viewed and rated obviously the elements of the quality and of that. So there are some ways by which you can somewhat quote unquote kind of leverage a bit of that AR, but I think it's anything else. I think you just have to be judgmental of certain customers. And if it's a customer you've had for a long time, who's been obviously a very good customer and continues to be, they're going to have to probably have some things flexibility wise in aid and helping them. But I think the standpoint is just it's having that value of the relationship. I think is what's huge across the board. We talked about with your banker, we've talked about with your CPA. But I think it's also important, for example, with your customers and with your vendor partners as well, to have those open line of communications, to be talking and to work things out.
Right, got it. That is good stuff. And I wanted to ask you, I'm going to cheat a little bit. So it's probably my question, but I'm going to ask you another question because before we wrap up, I do want to ask this question. What do you, in your experience, so you have significant financial experience, you've been a CFO, you do your work now with SharpCFO. With that experience, what do you see the economy looking like in the business community, from a business landscape? What do you see the economy doing in the next 6 months to 12 months?
Good question. Great question. Great question. I think there's still a lot of uncertainty aspects within there. I also had the good fortune, actually in September, of hosting a webinar session with Dan North, who's the chief economist with Euler Hermes, who's a very large credit insurance company. And I think just kind of going off some of his comments, I think were very good within there. I think they're showing business confidence, both small businesses and big businesses, actually is climbing and has been climbing. Obviously, we've seen from the standpoint, home sales are showing there's still a driver there from the standpoint for consumers. The stock market is close to where it was pre-economic shutdown. With that, it has climbed back very well, which instills obviously confidence. Unemployment, I saw yesterday in terms of the estimates now are for September is going to be about plus 789,000 jobs added back in September again, and the possibility of third quarter growth being close to 25%, which would be one of the highest for a quarter. Now, granted, that follows a 30% drop. But I think with that, there's still a lot of still a lot of uncertainties. What's going to happen with COVID? Is there going to be a spike? Is there actually going to be a vaccine that's going to be accepted people are going to use? Will a spike cause additional shutdowns within there? The Federal Reserve is still really keeping the money spigots open across the board for all, and is keeping interest rates low, and has said we're going to let inflation go above a 2% level. So I think there are a lot of strong, basis points within there, but I also think it reaches a point too, in cases where you need to focus. We need to focus and pay attention is on your business, in your business, and on yourself as well. I mean, the grand scheme of everything, the thing is out there, but I think the thing you need to look at from the standpoint internally a little bit is what markets now are available to you, maybe that weren't before, that you can get into. Talk with your team and people. How can you expand things internally? From the standpoint of talking and being on board with customers, are there new products or new services that they need that's up your alley from the standpoint of being able to provide? So just looking at that from a standpoint of your business, what you do, and focusing on that as well to see, gee, how can we work the economy of our company, of our business to improve, and what can we do for our customers, and what can we do from a standpoint with new customers with what we have and what we can offer.
Got it. Is that something your organization help provide some expertise as far as what are the right investment strategies? What are the right access to capital strategies? Is that something that your organization does for businesses? From
an investment strategy, I mean, I would look from a standpoint, for example, of market investment, things like that. Absolutely no. I don't have Series 7, 66, et cetera. That's not our avenue. From the standpoint of investment in the business, the standpoint of evaluating equipment purchase, for example, absolutely. From the standpoint of evaluating a building purchase, absolutely. From the standpoint of looking at something to say, gee, if maybe they believe that the parking lot needs to be repaved. Okay, fine, but is that a real good allocation and investment of cash right now, or can we kind of make it through with how it is, for example? So definitely that type, those type of aspects that can definitely be done or viewed from an investment standpoint within the business, and what does it return, and how does it help the business and improve in some way, be it for a particular customer or a particular product or particular service.
Got it. Well, that's good to know, because, I see that a lot. Should I look at this acquisition? Should I look at this capital expenditure? Can I afford it? Is it the right fit for me? Does it have a strategic value if I invest in this equipment or this process or this service? What is the return? And is it the right time to do something like that? So it's good to know. And for the audience, it's good to know that you provide that service, or there are some alternatives, or at least a discussion, a consultation around that. So, well, we have just a couple of minutes, Rob. I will open up the floor to any questions. I don't see Dale. Dale, I got your question, your comment. So you're funny. I appreciate that. So you are, if anyone knows Dale, he is very funny. So Dale, I will talk to you after this webinar. No, I'm just Dale is he's a great customer of mine, so I really appreciate that. So any other questions, you can put it in the chat, and Rob and I will be happy to address those as we wrap up. No. Okay, so Rob, I think we should probably, on the screen is the contact information for both Rob and I. We hope that you find this conversation informational. It is just a beginning conversation, just to give you some ideas of what we see in the marketplace and how we potentially can engage with you. So if you wanted to have further conversations with us, our contact information is on the screen. Feel free to reach out to us. There is no cost or no obligation to have a consultation in regards to some of the issues we talked about today. So Rob, any parting thoughts that you wanted to?
Just, John, I appreciate this. This was a lot of fun. I enjoyed this, and I think it's just to kind of echo your words from before. I mean, in terms of our conversation setting this up, and I think you said just the passion we both had and how we knew this all would coordinate and really kind of ties together in terms of with what we do professionally, and kind of what we're seeing with customers and other parts of the marketplace, and even with prospects was really good. And I just, like I said, I appreciated the conversations with you and how to do that. So it was really it was awesome.
Yeah, got it. Well, it's been a pleasure. We really thank you, Rob. Thank you for co-hosting this and the time you took to plan this out and bring us some value to those that attended. So we really appreciate that. So I think with that, we can sign off. This is being recorded. So if you want to, we can send out a copy of this recording. Please share this with your colleagues, any other business owners, executives, professionals. Please share this on LinkedIn or any other platform, or just refer this to any of your colleagues or friends. We would really appreciate it. So, Rob, thank you again. Everyone have a great day, and this has been a lot of fun. Thank you.
I'm going to hit with one final quote really quick too, my favorite of all time, yeah. And it applies to this really well. It's, quote, "Happiness is a positive cash flow," unquote.
There you go.
That's attributed to Frederick Adler. He was an economist in the 1880s.
Very good. I love it. That is a perfect way to end this. So, Rob, thank you. Everyone that attended, thank you. We really appreciate it, and we wish everyone well. All right, yeah. Take care. Thanks.
Absolutely. Have a great weekend. Thank you all.